Good morning. It's Thursday, March 20th, 2025. Zach Howard here, 3-minute morning market update. That's in my notebook. This morning we have Jay Powell, P.E. Powell, yesterday with that Fed press conference. No rate hike or cut as expected, but the real drama comes in this Q&A press conference after, where there's pre-submitted questions, pre-selected people get to ask the questions. Not a lot of substance, but sometimes there is. And when Powell was pressed about inflationary targets and growth targets not really lining up with expected policy, he kind of made himself look foolish, like often is the time with these central bankers where they lack credibility. We don't really get a lot of signal out of the central bankers for what's really going to happen, but we can if we look at the bond market. And bond yields, particularly that US 2-year yield, continues to scream lower, signaling slower growth, slower inflation. That's what the backdrop is. Powell uses that T word, transitory, not so much signal. But I like this quote from one of my favorite writers around markets, Benoit Mandelbrot, in the misbehavior of markets. So limited is our knowledge that we resort not to science, but to shamans such as P.E. Powell. We place control of the world's largest economy in the hands of a few elderly men, the central bankers. We do not understand what they do or how, but we have blind faith that they can somehow induce the economic spirits to bring us financial sunshine and rain and save us from the financial frost and pestilence. If there's one message I would like to survive this book, Mandelbrot's, is this: finance must abandon its bad habits and adopt a scientific method. A scientific method like you would use in physics, in math, in Mother Nature. Let's look at what the reality is of the math. The bond yields correlate with oil, lower lows, both signaling disinflation, slowing down of growth. The Fed did signal that they would slow their asset runoff, so their massive balance sheet, from $25 billion a month to $5 billion a month starting April 1st, which lines up with that April 2nd deadline for tariffs, will continue to accelerate the slowing growth backdrop. Play that out further, we have three rate cuts, priced into the market, looking at that bond yield for 2025, June, September, and December. However, by the time that May Fed meeting comes along again, the bond market will already tell us if that fourth rate cut is coming, because the slowdown in growth will already be seen in that bond yield. But that's what I got. Continue to say gold is a single post as well, with these higher lows, higher highs, signifying the same thing as that bond yield. Similar sets. Last but not least, Bitcoin had its fourth consecutive day of positive inflows into those Bitcoin ETFs, which really lines up with that price action. Today, Thursday, probably is a risk-off day. Again, volatility continues to chop in this 2025 bucket in the US S&P 500. Persistence with a massive 3.4 trillion options expiration into tomorrow Friday's close, which will continue to have a backdrop for tailwinds on increased volatility in this negative gamma market environment, where markets move much faster on the upside and much faster on the downside. We are still in bearish trends across those major indexes and those Mag 7 stocks. Have a great day. See you tomorrow Friday.